Prateek Agarwal joins us, business head and CIO at ASK Investment Manager. Prateek, everyone is of the view that suddenly the PMS schemes are getting a lot of redemption pressures, and new entrants who are part of the PMS schemes are feeling slightly nervous about the equity commitment. What is the picture at your end?
We are a wrong sample to talk to. We are not mid-cap focused house. We are quality and growth focused. Last month we had our highest net inflow over past 15 months, and one of the highest gross inflows as well. So we are not a correct sample because like I said, one, we are not mid-cap focused, and two, last year was a year when we lost market share while we got net new money, but others did much better. So versus last year, we continue to have very strong growth, and we really believe that growth should continue. Now, if I can just build a bit, in a fund distribution business, if you sell very strongly in one period, most people pay the channel partners higher amounts for year one and lower amounts for subsequent periods, and hence after the first year ends, there is a propensity to churn the AUM. This is something which is quite widely known. So businesses which saw very strong growth last year and are not having performance supporting them this year are the spaces where you should be more concerned about. And well, I think PMS is having its share of problems, but so are mutual funds.
How are you investing in this kind of a market? Because when you say quality, well, quality is not available cheap. I mean, all the good quality stocks, whether it's Bajaj Finance or HDFC Bank, or I mean the usual names which we both of us know, have only become more expensive as market has only got polarized. Handful of 50-60 stocks is where all the action is and where all the concentration is. So how are you approaching the market when you know that quality business, quality investing is great, but if quality investing is happening at a sensible price, then it's got a good investment. Right now, some of the stocks are trading at P multiples which are unheard of.
Yeah, so you named a lot of names that we have in the portfolio, and hence performance is looking fine. But you would also give it to us that over the past several years, while this concern has constantly been there, we have kept our focus on quality without compromise. And I keep saying, one has to start with quality. That alone enables long period consistent growth. And where you have that combination, as long as valuations make sense, that's the space to be in, rather than look at valuation first and then see growth and then see if there is a quality in that space. The second approach typically makes investors skid on a very slippery path. So we stay disciplined, we stay on this path, that's our chosen path. We still believe the names that you talked about offer upsides, and we continue to be focused, frankly, in those kind of names across our portfolios.
Prateek, morning. Stepping into the earnings as well, there are quite a few concerns about what happens to those 10 or 12 names where the market has been hiding and willing to pay just about any price. And that makes me come to IT, for instance. I mean, yesterday you got that bit of a scare when Infi fell 5%. What is that we can expect from both Infi and TCS, or largely IT per se, from earnings? And my bigger fear is, will earnings be able to match up to the kind of price movement that we've seen in the stocks?
Yeah, so we have stayed away from this pack for the same concern that you are highlighting. The stocks have done very well, so it's a miss from us. They belong to a very high quality space as well, so it hurts. But we do suspect that some bit of the price move is in looking at what is happening to rupee dollar and the rupee depreciation, which people believe should give these businesses a leg up. However, while US is a large business for all of the larger companies, overall cross currency is not favorable. We have seen appreciation versus many other countries, and there could be a degree of disappointment versus expectation. That's our sense. The start has been good, so Accenture has delivered better than expected results. So let numbers come in and we shall be able to analyze. This is any which way supposed to be a stronger quarter. So be hopeful, but I think the stock prices are building in a lot of the hope.
Okay. Having said that, when it comes to growth, is it really largely the consumption theme that you are still invested in? Have you churned your portfolio at all, where you've taken profits off the table from the expensive names and parked it in value? And where is it that you're finding value?
Yeah, so two spaces that we are most positive about and constitute 70 to 80% of our portfolios are consumption and financials. Financials focused on mostly retail, fee-based incomes, insurance, etc. So that is where we are invested in financials, and consumption for us includes autos, FMCGs, durables to some extent, and so on. Two-wheelers. Very clearly there is a lot going for these two spaces. Consumption space benefits from, apart from other things, election and election related spends that we will see going forward. We saw what happened when Karnataka happened, and then we have a MP and a Rajasthan, and then general elections. Two, consumption and banking space are the only spaces practically in terms of broad spectrum which pay full corporate tax rate. Now corporate taxation is reducing. Budget after budget you are increasing the size of businesses that may pay lesser tax. Over time these businesses will benefit. Third, on the consumption side, GST has been brought down. In a wide spectrum of products, more may get lower. What we have seen is, while the businesses have passed on the GST benefit, the people have uptraded. So premium categories have sold more, and there the margins are higher, and we a levers result manifests that very, very nicely. And of course, unorganized to organized moves. So as the e-way bill bites, I think this move will become more accelerated. So a lot going for consumption theme just now. So we want to stay into it. Banking and financial, very broad spectrum, not only lenders but also fee-based businesses. Mutual funds would come in, insurance companies. Both NBFCs and banks, mostly focused at retail, is what we are looking at. There is a business transfer that is happening from PSUs to private sector. We believe it will continue and maybe get stronger going forward. The business transfer is resulting in more than commensurate value creation. So if you look at the BankX over the past 4 years, it has 3 large PSU banks, it has 7 private sector banks. PSUs have lost market share. Credit growth has been just about overall less than double digit in the same period, yet the value creation that has happened has been quite significant and more than what a Nifty has done in the same period. So that's the point, as business transfer is happening, more than commensurate value transfer is happening. So this is a space we really want to be focused on also going forward.
I want to mark a couple of stocks here, and Prateek, I'm coming right back to you. We're not really able to spot any large movers today, but the breadth of the market has stopped caving in. Reliance is up 1%, Tata Motors is up 1%. Infosys after that 4-5% fall today seems to be making a comeback. So it's not looking all that bad, at least for the broader market as well. Shriram Transport also is down very sharply. Prateek, let's talk about a stock which I think you don't own, and that is Reliance Industries. Since you don't own it, we can talk about it. There's no compliance there. My view on Reliance is that our markets still giving Reliance a P multiple of an old economy company and a service provider. Do you think Reliance is one company which is trying to reboot itself to become more like a data company with intellectual property and platform? I mean, are they trying to create a combination of what Amazon or WhatsApp or Tencent is? I mean, are they headed that way? And if one has to take a 5-year window, do you think Reliance will no longer be remembered as a company which is a petrochemical company, but it will be remembered as a data and a AI company? I mean, when I started my career, Reliance was like a petrochemical and a polyester company. Then it became an exploration company. Now it is a telecom service provider company. 5 years from now, can it be something else?
So small answer is yes to all of what you are suggesting, and we do own Reliance in one of our funds. So after being a long period, away from Reliance, recently we have added Reliance in one of our funds. For a lot of the reasons that you are talking about in the telecom space. So one, the existing businesses may not be very strongly growing, but they over time have achieved the quality thresholds that we have set for ourselves. And in the new businesses, particularly telecom, while they are still not the largest player, they are the guys who are setting the rules of the game. So in terms of marketplace, they are the leaders, while in terms of market share, it's still some time till they reach there. If you look at how the market caps are divided between the players in the space, and you look at overall valuation that Reliance has and what can be ascribed to their telecom business, maybe that business as a part of Reliance can have significantly higher valuation. The other big piece that we really like in Reliance is the retail piece. While some bit of oil marketing gets merged there and numbers are not like to like, but it is the largest retail franchise in the country. It's a space which has seen a lot of value creation. Over time, we do expect the market to recognize what Reliance is really doing in that space. So broadband, in terms of what is available in the market, is actually very tiny. Transfer of market cap from that space into a Reliance may not be very high. When I am saying broadband, I mean businesses which are putting in fiber into the ground and selling bandwidth, not the telecom companies. So that may be a small play, but yes, they are getting the act together. The content that they have also gives them an edge. So yes, this is time to probably look at Reliance, and like I said, we have invested, and so the thoughts match there. What is also influencing is probably that the peak borrowing may be behind us. Over the next 1 year, we should see borrowing stabilize to go down. So if nothing else, a transfer of value from debt to equity.
Prateek, great speaking with you, and glad that you could finally make it on time on the show.
Thank you.